Credit scores are one thing that can be a little bit of a minefield when it comes to applying for a mortgage. But in my video today, I'm going to be breaking down how to boost your credit score quickly before applying for a mortgage in 2026. Hi, I'm Sam Fox, a mortgage expert here in the UK, and I go through everything from mortgages, savings, you name it. If you've been here before, you know my intro, but today is going to be specifically how to boost your credit file ahead of a mortgage application. So without further ado, make sure you like and subscribe. If you're not already, make sure you click it. We're here every Monday, making sure we've got the latest uploads ready for you to understand more about the world of mortgages. Who doesn't love it? Let's get going. Let's take a look at how lenders really use that credit score. Now, lenders don't just use your Experian, Equifax, or TransUnion score directly. They use the overall credit file, and each lender has their own scoring system. So let alone trying to get your head around three of them, these guys over here are going to use it something totally different. But what I will say is if you do have a great score of say 999, it's obviously a great indicator for a lender anyway. So it's a real positive thing to look at. Lenders though will still assess it on their own scorecard. Now these are the big credit card killers to avoid in 2026. First up, missed payments. Even one missed payment in 12 months can hurt and create chaos in a mortgage application. High credit card utilization, more than sort of 50%, is a red flag. Payday loans, I've said this before, recent use of them shows financial stress. Too many credit applications in a short period obviously looks a bit desperate if you're applying for everybody. And defaults and CCJs can become deal breakers. So if you do have a deal breaker, if you do have a CCJ or a default, sorry, guys behind the camera putting me off. Professionals trying to work here, guys. Anyway, a default and a CCJ can come down to you being approved or not from a lender. But there are lenders who will accept them, but you need to do a bit more digging or work with a broker to find where they are. So how the hell can we fix a credit score? I'm gonna be breaking it down into 30-day plans, 3-month plans, and even a little bit longer as well. So why don't we go through the quick wins and see what we can do to boost that score. Now, the first things first is get yourself on the electoral roll for stability and credibility with lenders. If you've moved and you've been renting and you've changed places a few times, make sure your voters roll follows you. Reduce your credit utilization below 30%, and I'd spread across those balances. If you've got one credit card that's maxed out and one with nothing on, you might be able to do a balance transfer, reduce your interest rate, and pay it off quicker anyway. Set your bills to direct debit to avoid missed payments. So things like Very might send you a text to say make your payment, but you're not going to direct debit set up. That can go against you. Make sure you get that on direct debit. Remove ex-partners or flatmates from financial associations from like joint accounts and that kind of thing. And there's some little quick wins. Looking a little bit longer, sort of 2 months, 60 days, I'd build clean money patterns on your bank statements. Like we've said in other videos, I'd have stable income coming in, bills that are predictable to go out, and make sure that the spending habits are within the limits there. I'd also make sure you're not going in over your overdraft or living too close in your overdraft for long periods of time. And I'd also pay down revolving debts as well. So like store cards, if you're like most people this day and age, you've got a Klarna account or ClearPay and you buy things online quickly and frivolously and we forget to send them back, let's just put a curb to it. There's no need to do them build up to a mortgage application. Let's just keep your spending as routine as possible. And then we have plans to improve the credit score over a longer period of time. So the first month, I'd say clean up all the existing issues. I'd lower the utilization. I would stop any credit applications or stop taking out new credit cards. The second month, I'd build healthy patterns of stability, reduce debts, keep balances predictable, income coming in, bills being maintained and going out. There's not money going everywhere. And third, I'd then start to prepare the bank statements, and I'd avoid risky behavior like spending loads of gambling or having loads of cash in and out that coming out of the account that is unexplainable. I need to make sure, or you need to make sure, that in the eyes of a lender, when they look at your bank statements and your credit report, everything is just really routine and there's no questions that need to be asking. So quick one on the phone, there's some common myths I want to talk to you about. The first thing is closing your old credit cards, that lowers your score. Actually, the longer you have your financial accounts open, the more stability that it shows. Even if you've got a balance of 0 and you've had a credit card with a balance, or sorry, a limit of £10,000 and you've had it for 5, 6, 7 years, but there's nothing on there, that is an actual positive because it shows that you're not seen as a target. That credit card is there to be used for essential purchases like, I don't know, a holiday, where you want to purchase it on there and pay it off over a longer period of time. Checking your credit report hurts your score. Now, that is the biggest farce ever. Checking your score is great because it means that you're looking at your payments on your accounts, you're looking at your balances, and you can see what a potential lender is going to look at as well. It doesn't hurt you to check your credit file. What does hurt your credit file is if you're making applications and somebody else is checking that file and doing a hard footprint on there to see your credit worthiness. That's where it might be a bit more of a no-no for lenders. You don't need a perfect score. A clean record You don't need a perfect score. A clean record is sufficient. Well, that might be true, but like I've said earlier in the video, each lender has their own internal scorecard. So if you just got a clean credit file, let's say somebody's got no credit whatsoever. They've just got a bank account and an overdraft facility that they don't ever use. Now, from a lending point of view, it's like this client's got no borrowing facilities, there's no history of them having any money, but the score's all right. Some lenders might decline it on their internal scorecard. And the reason being is because they might be lending you 100 grand, but they don't know what you're gonna do or how you're gonna act with a mortgage, if you're gonna be good or not good, or you're gonna be credit worthy, or you're gonna be responsible. So it's always a good tip to have some form of credit. Low APR credit card is great. Put your petrol essential shopping on, pay it off in full each month, and it builds up that credit rating. And what it shows to lenders is that you are responsible with the limit that you've been given. So that's one to note on there. Klarna is only a problem if used irresponsibly or too frequently. Now, I would tend to agree with that. Klarna is great because it allows us access to products that we might not have been able to afford, but it can be a downward spiral. Where you're shopping online, you'll see the little pink logo of Klarna and say, yeah, I can buy it on Klarna, I can send it back. But how many of you watching this video have over-purchased stuff on Klarna thinking, I'll send that back, and have never actually sent it back? Yeah, it's a note to me as well. So I would always make sure that you're only spending it on essential things where needed. And there you have it, nice and short today. That's the credit scores, and that's how you can improve them. If there are other ways that you can add to our viewers, then make sure you add them into the comment section below. If you do want to talk through your credit report, or you're concerned about what's on there, like late payments, CCJs, or defaults, there's not much that I haven't seen over the past 10 years, so please do me a favor, drop me an email. It's sam@ukmc.co.uk. I'm more than happy to see if we can help. I'll see you next time.